So the major task then is to determine this tax value. The difficult ones are things like cars. What is the tax value of you being able to use an employer's car for private purposes? The Tax Act gets around this problem in two ways. One, you can use a so-called statutory formula for determining the tax value, or you can use a more accurate method, the cost basis of determining the tax value of the car. Having got the tax value, as I said before, we gross it up, and then the employer pays tax on that grossed up amount. The statutory formula method is very easy. It's based on the amount of money that the car is worth, the value of the car, what the car cost, and it's then based on the distance travelled. And simple as that. Whether the distance travelled is for business or private is irrelevant. It's simply based on the distance travelled. With the cost basis, we need to work out the cost of the car, plus depreciation, any interest on money borrowed to buy the car, the petrol, the oil, the maintenance, etc., etc. And then through using a logbook, the percentage that's private will be based on the amount in this logbook. The logbook will keep a track of all travel in the car. The percentage then might be, say, 90% business, 10% private. So 10% of these private expenses will be the tax value of the car. So cars have two methods of determining the tax value, and generally speaking, it's not very, I'm not giving too much away by saying I would be learning particularly the statutory formula method in Section 9 of the Act. Loan fringe benefits we need to look at. This is where my employer gives me a $10,000, $20,000 loan, maybe interest-free, and if that is the case, then the tax value will be the difference between the interest-free and the so-called statutory interest rate. In 2013-14, the rate will become 6.45%. In other words, I get a free loan. The tax value of the free loan is 6.45% each year would be the tax value of the loan, because that's the interest that I'm not having to pay. If my employer gives me the loan but charges me, let's just say, 7%, I might still consider that to be cheaper than going to the bank, so I'm happy to take that loan at 7%, but from the employer's point of view, there are no fringe benefits attached to that because I'm paying more than the statutory rate of 6.45. Now, some of you who are looking at perhaps older textbooks might see that the rate was different, and that could be correct. The rate changes each year, and the tax office issues what the current statutory interest rate is going to be. Expense payments. If my employer reimburses me for certain expense payments, perhaps paying the school fees, the kids' school fees, then the tax value is nice and easy. For us, it's simply the amount of the reimbursement. Meal entertainment. This is a little bit complicated. I suggest you have a look at it, but the idea is fairly straightforward, and that is if I entertain someone else for a meal and my employer pays, then the fringe benefit is just my portion of the meal. Property benefits, goods and services. If my employer gives me property for nothing, then that's got a tax value, generally what they pay for the property. If, however, they are the manufacturers or it's property they normally sell, for example, I might work for Harvey Norman and they give me a free TV set, then the Tax Act in Section 40 lays down certain rules for what are known as in-house benefits. That is, where I'm getting a property benefit from my employer and the property is something that they normally sell. And the final one that we need to know are residual fringe benefits. Now, residual fringe benefits are where there's no property and there's no expense reimbursement. Generally, I think of residual fringe benefits as being, for example, if I worked for a firm of solicitors and I was going to buy a house and the firm of solicitors gave me free legal advice on purchasing that house, I'm not getting an expense payment, I'm just simply getting a free advice. That would be a residual fringe benefit, and the value would be, as you'll see when you look at Section 45, 75% of what they would normally charge their customers. That would be the tax value. So these 7 items are the ones that you need to know. There are many more in the Act. You'll see in the Fringe Benefits Tax Assessment Act, there are more examples of different fringe benefits and different rules for determining the tax value. These are the 7 that you need to know, and what you need to know is how to calculate the tax value of each of these fringe benefits.